All right, so today is nothing crazy. Today's price action study is going to be just referencing past data using what I learned in month 5, video 1 about quarterly shifts, the interbank price delivery algorithm, and how the ranges will change. So we're starting here on the daily chart on the US dollar index, which is inverse to the Nasdaq and as well as the ES or E-mini S&P. Now, what I'm going to be doing here is I'm primarily going to be backtesting this with NQ for this example, but that it applies to both. All right. So, anyways, you're probably wondering what these weird lines are, and to simplify what I'm delineating here. So, here is the last month. Not including, I know we obviously had the entire range last month, and obviously we're on the first now, but we do the last month where the entire monthly range was traded. So that it happens to fall on November 1st. We look 20 days in the past, 40 days in the past, and 60 days in the past, and we view these quarterly market structure shifts. And those are trading days, not actual real life days, but trading days. Okay? So the very first thing we're going to do is we're going to get our perspective from looking back and seeing, where prices came from, essentially, is what he was explaining. These lines here are messing me up a little bit. It's just too much on the chart, so I'm just going to delete those to make this more clear. And this I'm also going to delete as well. All right. So this is precisely 4 months in the range. So from here to the beginning of this first line would also be 20 days. All right. So we're going to begin by viewing where we have been in the last 20 days, or where that quarterly shift has been. And what we see is we've been in a consolidation range on the US dollar. All right. At the beginning of this month, ultimately, we see a breakthrough that consolidation range, and this is the beginning of November, not this current month, but we see a breakthrough these relative equal lows, and we see a retracement back to that old low. But this is relevant, this aggressive run below these lows, because it indicates a market structure shift. So look at the 20 days of price action afterwards, and we see that in total for the last 20 days, from here to here, with that shift, we have been moving to the downside to these stops down here. So now that we're about 20 days in, we can anticipate a shift to the upside with this high, this void, this gap being relevant. As far as old lows, I mean, we've already been moving lower. So again, what I've been mentioning even in my actual analysis is I'm waiting for indication that price will want to move to the upside, because we're only 20 days in, but we do still have this entire range. So I'm not sure what price will want to do here, but it doesn't matter just yet. We're just studying where prices came from. So even in the last 60 days before it moved to that consolidation range, should be from right here, that was an expansion. So, and then prior to that was also an expansion. So this quarter expanded here all the way, that's 20 days, so that's in an entire trading month. There we go. Another expansion, consolidation, expansion lower. All right. And we also have these different levels where price was traded on one side here, which you see price gravitating towards. Price trade on one side of the market here, which we see price gravitating towards. We have an old low here, which would be in the entire range. But ultimately, in the 4-month range, this is just outlined 4 months prior to November. I haven't done anything, magic or special here. We just see it aggressively expand. And prior to that month, the month delineated here is July. Okay, so now here in July, we look at the 20 days previous. Now this is obviously if we were actually trading, because you'll have your view of where prices came from and then where you anticipate price going to based on that. So 20 days, 40 days, 60 days, viewing those quarterly shifts. All right, well, 60 days prior, we came from a consolidation. Then, at around 40 days, right before it, we had a break above an old high, and then a return to that high, and an aggressive move to the upside to take out the buy stops above this high here. And after those buy stops are taken, we see a consolidation still in the past 40 days prior to this range that was created here. You'd be noting this high and this low. And as soon as this high forms, and we're at around 20 days, the past 20 days, or the quarterly range we see there, is a retracement. So in other words, we have this consolidation here. All right, see movement to the downside, and then within that leg, we see a retracement to the past order block. Break and shift, return to the old low that was violated, aggressive movement to the downside. What do we also notice? The lows that were created from the past 60 days were violated here. Something I had mentioned previously, not with this perspective in mind, but those lows are very clearly violated. One of the things that I've mentioned over and over, based on what I've learned, is the fact that markets move from a consolidation into an expansion and nothing different. It doesn't go, retracement, well, it can go retracement consolidation, but markets move from consolidation into expansion is what I'm essentially saying. We have this consolidation, expansion. From expansion, it can go consolidation, reversal, or retracement. We get a retracement. We also get that with a slight consolidation at the end of that retracement after it returns to that order block. When price returns to that order block, we then have that aggressive movement to the downside below those stops. Now, here we are. In the first 20 days, we can expect some shift in market structure, all the way to where I delineated this first line here. This is what we see. Aggressive movement to the upside. Why is price aggressively moving to the upside? Aggressively moving to the upside because we just took stops below an old low, and price was aggressively moved by large funds and smart money entities to take out that level of sell side. Then we have buy stops here, here, and here. Also here, 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 and here that have all been previously created as price has aggressively moved lower. We also have this void here, which, we can rightfully anticipate price to gravitate to as it has here. Now we look at where we are currently. Last 20 days of price action. The last 20 days of price action has been a complete consolidation. We've noticed that price moved from an expansion and consolidated. Now what we can notice here on the US dollar is an aggressive run below an old low, which actually gets retraded. Trades to about the halfway point of the order block, or the last up movement for the down move. After that, we see another aggressive run below an old low. So now looking here on the daily, what do we have? Well, first off, let's mention the fact that 20 days on the US dollar. 20 days, we can expect a shift, a quarterly shift. So we have this high back here, we have this void back here, and additionally, he mentioned looking for the Kraken correlation, which I cannot necessarily see just yet, but hopefully, through going through this, I will, be able to come to that idea and conclusion. Now, you can view my previous, price action studies and, what I've been going through on there, but it's the same thing here. I won't go through the entire process, but to the left of this line, we're looking at, again, where prices came from and the institutional order flow. So I'm really just going to take a note of this very quickly here on NQ. because it's going to be diametrically opposed to the US dollar. So, this is July 11th. This is precisely 4 months back. Okay? So, prior to that, we look 40 days. There we go. Here's that 40-day shift. Notice price runs below this level of sell side, and price is consolidating prior to that. When we start getting into that, into the 40 days prior to July, this is all consolidation range within that 40 days. Or within that 60 days, I mean. 60 days prior to July, we're in a consolidation. 40 days prior to July, or the aforementioned point, expansion. Price moves from a consolidation into an expansion. Here we go. Past 20 days. The past 20 days, price trades lower because we had this aggressive movement to the upside. It doesn't stay down there long, though, because it creates these highs back here. And the next quarterly shift, we have this. This would be a retracement back into that previously created range. Okay, and then we see price kind of consolidate. 20 days after, looking from here to here, 20 days after, more consolidation. Just very sideways price action, just as we see here. Sideways price action, not really showing that it wants to go anywhere. Besides here, when we have that aggressive movement to the upside. Now it does the same thing in the first 20 days. Now, from here to here is approximately 40 days. So, after the 20 days, you see an aggressive movement to the downside, taking out the stops below here and trading back to this gap that was inefficiently traded. We now have a new low that's formed. Let's look at the next quarterly shift, noted right here. It's another consolidation, but what is it more importantly? Well, prior to that, we had a retracement back to this previous expansion range from a consolidation. Price had returned back to an order block here. After that order block has been retraded, or the last up close before the down move, we see aggressive movement to the sell side. We again have a new order block form right here. Here we go, 20 days prior to where November was in that current range. 20 days prior, what do we see? Consolidation. So, in other words, consolidation, expansion back to the downside, taking out these stops. We have an aggressive run down here again, and now we have these relative equal lows. Our quarterly shift comes around, and while we're in that, I mean, it takes a few days to form. Really just wants to trade back to this order block, and then the last 20 days, it aggressively runs those stops. So what have we been seeing after those stops are ran? What have we been seeing in the last 20 days? Well, we've seen price now take these highs from the last quarter, aggressively run these highs from the quarter prior to it, and now has shown a willingness to trade the highs from about 4 months ago. And now we consolidate. So, ultimately, when looking at just this range here, just this data here, where would we say we are more likely to expect price? Would I say, oh yes, this looks like a great buy opportunity. You know, we're above these relative equal highs. You know, let's go ahead and buy up. I mean, you know, that's obviously a break-in resistance, right? Well, we know price is only trading above here to take these stops. Now that it's moving sideways, we can also view this as a form of distribution because it is external range liquidity in the form of a consolidation above multiple relative equal highs, including this high back here. Of course, each of these candles represents a day, but we also have this very large range that we can expect price to rebalance. If we go here down to the US dollar, we can notice the exact same thing. Aggressive movement in the last 20 days. So we can reasonably expect the US dollar to be reaching higher. Why is that relevant? Well, we've seen the US dollar trade below these stops, aggressive movement to the downside to take out these stops. While we do have more, of the range here, we can reasonably expect a retracement back into that range before price continues lower. Looking where we came from in the last 20 days, it's a consolidation into an expansion. From an expansion, we're going to see a consolidation, retracement, or reversal. So from here, ultimately, we are currently seeing price trade above the high here and the high here. Now, this in itself, I would want to see, again, still more aggressive run, just as I've been mentioning. But when we pair that idea of where price is likely to go, we can now look at the consolidation and where it's been going. Currently, we have this low and a fairly aggressive run below it. That in itself just activates an order block, and we keep in mind where price is and what it's been doing. Has this shown real indication that it wants to move down here? No, it has not. It has shown that it is now consolidating above these highs, but we're looking mainly at these quarterly ranges. Now, the next thing, let's go ahead and look for some manipulation between these two pairs. In other words, let's look at this. When NQ was creating these lows and taking sell side, let's see if in the last 40 days prior to November, if we see that on the US dollar. So in this case, do we see the US dollar creating relative equal highs from the last 40 days? Well, this would be in time the same delineation, but ultimately we see price making a higher high, and then we see price create that high and go lower. Well, here we actually see price consolidate and then move lower. So, in other words, the last 40 days, actually a little sooner before it, I'm going to mark here just because it looks better. In fact, I'm doing it wrong, actually. I'm not going to mark that at all. That's what I'll be wanting to do on the US dollar. From here, these relative equal highs to, we'll just say the next quarterly shift. So we'll say from the last 40 to 20 days, what we see price doing. Mark it exactly. Okay. So, the US dollar continues to make low, higher low, higher low, higher low. So if the US dollar is continuing to make higher lows, then we should see NQ make lower lows. Which in fact we do see. Price continues making lower lows. In fact, creates relative equal lows. So, in this case, the price action is exactly the same, but this isn't necessarily the shift. But if we go to the month prior, we have this high, and then this high, showing weakness or willingness to move to the sell side. So, what we should see is a low form and a higher low form afterwards, or a high being violated. So here, let me just make sure I'm looking at the right sample. Okay, so be right here. So this was the shift in market structure, same range. Now here, we just see aggressive movement to the upside. Whereas here, we actually see a failure swing before it makes that aggressive move to the downside. Again, these markets being diametrically opposed. So this is showing weakness to the sell side, as in price wants to move lower. Price is only going up here to rebalance this void, and that void is also an aggressive run below an old low. We trade that. It's also from a consolidation. It creates a new order block. Price later refers to that order block. Here, in the same exact data from here to here, that's what we're looking at, there's nothing like that. It just shows that price wants to continue to make new highs. So as price is making new highs, one would reasonably expect this to be making new lows, but instead we have price do this retracement into that previous range. That would be a crack in correlation, as these markets should move the exact same. Now, let's go to the very earliest one I have here. So this is another market structure shift noted by November of 2022. So we'll view the second quarter from November, where we had this high violated and then retrades to bounce this range before proceeding higher. In other words, we have a high and a higher high on the NASDAQ. So we should, in theory, have the opposite of this. We should see a low being violated within that time period from November 22nd, looking at that second quarter. So here we go. November 22nd, quarter 1, quarter 2. So between here and here would be the same price action. Between here and here. Now, we do have that. We have a low and an aggressive run below that. And it's also an aggressive run below this low back here. But let me do that again just to make sure I'm looking at it right. So we want a low to form. And an aggressive run below it. We actually don't have that here. So, in the same time period, we have this low form on the US dollar. We're looking at now. And while the wicks may try to fool us, we know that the majority of the volume shows us that price has no indication of that. Even if we want to mark it sideways, just like this, price is not doing the same thing. It is not, in this case, where we see price running out the stops and returning to it. We have price creating relative equal lows in the same time frame, where price should be running out those stops, and then afterwards we should see aggressive movement to the downside, just as we saw here. Buy stops ran out, aggressive movement to the upside. So we should have sell stops ran out, and then an aggressive movement in that direction, which we don't get. So I'm trying to think of how to articulate this properly. So give me one moment. December 22nd, February 7th. December 22nd. Okay, December 22nd to February 27th. So, here is, we're viewing the same range from here to here, December 22nd to February 22nd. But in that time period, it seems to do almost exactly what the Nasdaq is doing, which is running above an old high. So what we're really seeing here is while the Nasdaq fails to make a lower low, what's actually happening in that same time frame is we have, let me get back to it because that's not right now. December, January, February. Okay, February. We have these relative equal highs forming, and this quarter consolidates before we then drop lower. Price just creates relative equal highs, whereas NQ takes buy stops. So, because this is what I'm really struggling to understand, and less the quarter concept, I'm going to actually read out some of my notes and explain what was said, so I can have a point of reference for later on. So, for buy programs, when the United States dollar creates a lower low, the S&P or NQ should make a higher low. When the US dollar creates a lower low, when the US dollar creates a lower high, the S&P should make a lower low. When the US dollar creates a higher high, the S&P should make a higher low. Those are all buy programs. That's what I would be looking for here. So, ultimately, let's try that again, and we'll do it with a different price action sample. So, we'll view Wednesday, April 19th. Well, let's get it more centered around a actual market structure shift. So, we'll just use the July opening that I have marked out. And we would be then looking for a buy program. So, on US dollar, okay. So, prior to July, the last 40 days, we have a low and a lower low form on the US dollar. Here's July, past 40 days. So, we should see this making a higher low, which it does. We have this low here. Well, from here, be more realistic. Here, higher low, and expansion to the upside. From here, this low, past 40 days, we have also lower high. So this should show a lower low. We don't necessarily see it in that time frame. Let's see. In fact, let's make this a little easier. Um, Okay, here's an example. The US dollar creates a lower high, indicated by this line. We're looking at the US dollar index. So, the US dollar index creates a lower high, while the S&P makes a lower low, which is indicated by this low and this low here, this high at the same time, right about here, and here. So in the same time that this makes a lower low, this makes a failure swing. This takes stops, this makes a failure swing. And the adverse of that is that price then moves towards the buy side. Whereas, of course, in the US dollar, supposed, we have this failure swing, and then price then moves to the sell side to take sell stops. Also seems to rebalance this range just looking at this crude chart or whatever you want to call it. Let's see here. Really, I need to make sure I can also see that range. So about 25 days here. It's a fail swing. It's showing strength to the buy side. So this would make a higher low in our buy program. So we would need the US dollar to make a higher high, which we don't necessarily have there. But ultimately to clarify on this, because I'm about to end this video, you're looking for one of them to take buy stops while the other shows weakness, or take sell stops while the other takes weakness. If I see the S&P showing weakness, then and I see the US dollar taking buy stops at a level where I'd reasonably expect price to shift, or I expect a market structure shift, including time, such as a quarter, then I can reasonably anticipate price to start drawing in a different direction. The reason I'm struggling here is, firstly, I think I'd be better off with two monitors. I sure can select the layout and move it, but I keep having to switch between charts, and honestly, I'm just getting caught up in that. That's why I pulled this down here. But ultimately, it's the same thing as SMC. We're looking for the Kraken correlation. The only difference here is you're using that with quarterly theory. So, I could continue attempting to go over this, but I understand what it is. And I'm going to go over this on my own.